Hey, so today I want to talk to you about real estate versus the stock market as an investment. So there's a lot of numbers in this, but I want to raise your real estate IQ a little bit by helping you understand the return you get on real estate versus the return you get in the stock market. What kind of got this queued up was I was looking at my own investment portfolio, and last year the stock market had a horrible year. The average portfolio lost 14%. So let's start by comparing what would have happened if instead of having your money in the stock market, you had it in the real estate market. People who know me know that I'm a huge proponent of investing in real estate. At the very least, I encourage you to own a home that you live in. Basically, that takes your biggest monthly expense, the expense for lodging, rent, mortgage, whatever it is, and turns it into something that is making you money. Let's say that you had $400,000 in the stock market at the beginning of last year. So if you lost 14% in the stock market, which was the average, your portfolio would be down $56,000, and that $400,000 investment would now be worth $344,000. So that's not too good. If your investment's going backwards, it is a bad investment. I'm not saying the stock market is always bad, but last year it was horrible. But let's say that you, instead of investing that $400,000 in the stock market, you used it to buy a piece of residential real estate. So if you had bought that sometime between December and February of last year, your average price per square foot in Murfreesboro was $205. So if you still own that piece of property today through that December through the end of February, your new average price per square foot in terms of value is now $210. So that means that in the last year when the stock market was down 14%, real estate was up 2.4%. And that's in the midst of a market, quote unquote, correction. That's in the midst of the market shifting and changing. That's in the midst of sellers pulling their house off the market, buyers being afraid to buy them. The market has still gone up in Murfreesboro because we still have great fundamentals here where tons of people are still moving to Murfreesboro. So they're still pushing those prices up. So you would have gained $9,600 and your $400,000 investment would now be worth $409,600. But let's take that a step further. One of the great things about real estate is you get to get the benefit of appreciation of a huge asset in terms of value with only a little bit of cash to control it. So for instance, let's say when you bought that $400,000 house, you put down 5% or $20,000 into the total there. And that's being actually kind of conservative because you can buy houses with 3.5% down or even zero down if you're buying a primary residence, right? So let's say you put that $20,000 down, that 5%. That means that you made $9,600 in appreciation in that 1 year. So that means on your $20,000 cash investment, your return on that cash on cash, is 48%. Show me another investment where you can make 48% cash on cash. So last year was a really bad year for the stock market. So let's look at the last 5 years and the last 10 years and see how real estate in Murfreesboro compares to the stock market as a whole, right? So if we look at the last 5 years in the stock market, if you had put that $400,000 investment in there, you would have made an average, the stock market over that time frame averaged 60.2% return. That means you would have made $240,800 in the stock market over those 5 years. That's pretty good. I'd be happy to make that kind of return over 5 years. However, let's look at real estate. So if you had bought real estate in Murfreesboro 5 years ago and you had put that $400,000 down, you would have had a 68% return. That is 8% more than what the stock market delivered in that same 5 years. So you would have made $272,000 and your $400,000 investment would now be worth $672,000. However, let's take a look at what your cash on cash return is, and it is nothing short of amazing. So for that $20,000 you put down, you made a return of 1,360%. Yes, you heard me correct. Over 1,000% return on your cash in just 5 years. All right, 10 years. Let's look at 10 years. Does real estate in Murfreesboro outperform the stock market over the last 10 years? I think you probably know the answer is going to be yes. But in 10 years, the stock market has gone up an average of 141.5%. That means if you had invested that 400,000 in the market 10 years ago and you hit the average, you would have a return of $566,000. That means your investment would be worth 900 plus. However, in real estate, that 141 gets beat because your return over 10 years in Murfreesboro residential real estate is 159.3%. That means your $400,000 investment has given you a return in equity in that house of $637,200. That means your current house is now worth over $1 million. And get this, this is going to blow your mind. That $20,000 that you put down, your return cash over on cash is 3,186% in just 10 years. 3,186% in 10 years. Can you see why I am a huge proponent of real estate? It's no wonder that homeowners have 45 times the amount of wealth on average than renters. You should by all means be diversified in your investments. You shouldn't put all your eggs in one basket. They shouldn't all be in stocks. They shouldn't all be in bonds. They shouldn't all be in real estate. However, your personal residence, you should definitely have one or two rental properties that are appreciating in value. They're being paid down by the tenants bringing you money every month. And for those of you who are saying, well, I can't invest in real estate, all my money is in my 401k, I can share with you there are ways to take your 401k money and invest in real estate without having to pull that money out of your retirement account. If you're interested in that, give me a call. I'll help you figure it out. So get yourself started in real estate and watch your wealth grow.